the market is shifting right now. So we're headed for a crash, a correction, or our price is going to rise. It really doesn't matter who I'm talking to, whether it be somebody looking for a house, selling a house, not even thinking about it, or other realtors. Everyone is asking the same questions. What is going on in this market? Now, these questions are asked in usually one of two ways. I either get the head tilt, the how's the market going? To those people, I know that they've got a lot of concern. They were maybe beaten up in the 2008 market crash, and they're really concerned about what's going on in the market. The second one is, how's the market? Almost like they're wringing their hands. They are like a lion waiting to pounce. They can't wait for me to tell them the market is crashing. Get ready. You are going to be able to buy things at 50% off. It really is one or the other. How the question gets answered. You know what I'm talking about. So think about that for a second. Tell me, which one are you? Are you concerned or are you waiting for those deals to come? So what can we really expect in the Phoenix housing market over the next few weeks and months? And that is exactly what we're going to talk about right now. I'm going to show you some great slides. So hang with me. Make sure you stay till the end because we've got some good ones. So we've talked about this in other videos. And the first thing that we are going to start seeing as our market shifts are the number of price changes every week. Now, this is the number of listings that have decided to change their price. Now, I started talking about this a while ago because I started seeing price reductions, and it was something that we had not seen in a while. So the other thing that I noticed just a few months ago was that we started to see homes actually cancel and expire. Now, we hadn't seen that in almost 2 years because things were selling so quickly. So as you can see from this chart, the number of price reductions on homes that are listed has gone up drastically. Now, that really started back in about, March and April. So when we're looking at price reductions in specific price points, it's very telling. So this is between 300 and 400,000, and the overall price reduction amount that they're reducing their price is by $10,000. Now, as the price point changes, we're looking here at 400,000 to up to $1.5 million. And you can see that the price changes are quite drastic depending on what price point you're in. Now, when you get into the $1 million to $1.5 million, the average price reduction is $50,000. So now when we look at that $1.5 million price point or higher, that is when the significant price reduction numbers come out. So when we look even at $3 million price point, the median price reduction amount is $187,500. That's quite a significant chunk off of your listing price. Now, we've talked about this again in some other videos that really some of the reason that these price reductions are happening in general is because these prices probably shouldn't have been as high as they were to start with. Maybe the home needed some updating, maybe it wasn't in the best location, and it probably shouldn't have been priced as high as it was right from the start. But not everybody was paying attention and really understanding that we really were in a shifting market before it actually happened. So now people really are taking heed and they're starting to notice. And right now, it's funny, the Cromford Report wrote something, and I don't have it right in front of me, but they wrote, sellers, this is not the best time for you to start testing your price points. So it's really important right now to not test a really high price point just to see how it goes, like a lot of people were doing for the last about 2 years. So the next thing that we are going to look for is we're going to look at the increase in days on market. As you can see, we are starting to increase. Now, here's the thing that I want to talk about. And I've talked about this in some other videos. Right here, this right there, we were kind of flat and we were at about 7 days for a really long time. And again, I've spoken about this in some other videos. That 7 days, I really feel was an inflated 7 days because for the last about 18 months to 2 years, what was happening is these homes would go on the market, say like on a Thursday or a Friday. And then they would say, well, we're accepting all offers, but we're collecting them all and we'll submit them to the seller on Sunday or Monday with response time by Tuesday. So that's a few days right there where they could have gotten an offer and gotten it under contract in like 2 to 3 days. So in my estimation, the real days on market during the height of our market was really about 2 to 3. Now, I want to point something out right here because people are going to probably say, wait a second, what is that? What is going on there? That was a glitch in the computer system. As you can see by the note down below, they had a glitch in the computer system when they were doing this, so they missed some days on market. So don't freak out and go, oh my gosh, why did the days on market jump right there? that technical difficulties. So I just want to point that out so that nobody gets a little freaked out. So here is another thing that we are starting to see is we are starting to see less and less offers over list price. Now, they are still happening. And I can tell you personally, some of the buyers that I'm working right now, we are still offering over list price. Maybe not as much over list price, but we are still offering over list price and not always getting it. And the biggest reason right now is that sellers are really looking for that complete appraisal waiver. They know that the market's shifting. And the last time we went through this shift during the crash, appraisers came out and they started appraising and they would adjust down if they thought that the market was shifting during that time. Now, I have not heard from any appraiser out there right now that is what they are doing, but I know that happened in the past. So it's just something, again, that I'm looking out for, I'm aware of, just so that I can make sure that I'm protecting my sellers to the best of my ability. If we feel like, oof, gosh, it could get a little dicey on this appraisal. So again, on this chart, what we are seeing is we're seeing a decrease in the number of contracts over list price. Now, here is June, really, really low, but we're in the beginning of June. So that is going to change. So don't think that it just fell off a cliff. We still have days in June that it's going to come. We have to see an increase in the daily price reductions on listings, which we are seeing. We also have to see an increase in the days on market, which we are also seeing. That third thing is right here. We need to see an increase in the seller concessions that they're giving to buyers. We are not seeing that still. It is still really low. Again, down here, this is June, so it still has a chance to come up, but it is staying low. We are not seeing any drastic changes in this number as of right now. And for that reason, this is why prices are going to continue to stay where they are right now. Okay, so that seller concession is that last thing that we would need to really start increasing before we would start to see prices significantly change. So one of the things that people are forgetting, and it's funny because I just had a conversation with an agent today that was asking me, like, what do you see? What do you see in the market? Everything's slowing down. I don't understand. And I said, well, I think the thing that people are forgetting about is that this is our normal summer slowdown. We are not like other markets that see an increase in their purchases and sales during the summer. It is so hot that people go on vacation. They want to get out of town. So for the last 2 years, we've all kind of been locked up, not been able to travel as much. This year, it's totally different. People are able to get out. They're able to travel. And so I think what we're seeing right now is we are seeing our normal seasonal slowdown. We just haven't seen that seasonal trend for so long. Now, I say that, and I can tell you that my buyers are actively looking. I've got sellers that actively are putting their houses on the market, and things are still moving. We are still getting offers. We are still writing contracts. It's just decreased from that absolute frenzy that we were in before. And so it is a shift, and people are having a little hard time getting used to it. Okay, so whenever we start talking about a slowdown, a crash, a bubble, all those things, the first thing that comes out of everyone's mouth is foreclosures, short sales. Everyone thinks that those are all just going to flood back into the market. Well, here is the data to show you what's going on in our market right now. And as you can see, it's quite low. This is the 2008 bubble. That is what we had going on in pre-foreclosures or short sales during that time. This is where we are now. Now, if you're reading any headlines that say that the foreclosure rate has jumped by 300%, it's true, because it was here, almost flatlined, because we had a moratorium. So we couldn't do foreclosures. So sure, they have gone up. But of all of these right here, the number of foreclosures that actually sold to a third party, 31. That's it. So for those people waiting for those foreclosures to come, please don't hold your breath. I can't get to all of you to perform CPR. It's just not going to happen. Our market is still strong. So for those of you that are out there saying, but what about all those things we're hearing about, layoffs and jobs changing and all that, which I just read an article about literally earlier today that said, again, it wants to start with the doom and gloom. And then at the end, it starts talking about all the positivity, but their jobs are still strong. Yes, some tech jobs are being laid off, but there's a lot of other job openings out there that they can go get other jobs. So we have right now, as far as equity in people's homes, we're in the billions that people have in equity in their homes. So If somebody lost their job and could no longer afford their home, they could literally put their house on the market. And let's just talk about this. I know our days on market have gone up, and I know that the price decreases have gone up, which were two of the factors that we need before prices start to come down. However, it's still 11 days before somebody's house gets sold. So you have 90 days to sell your house if you're in pre-foreclosure. You could likely sell your house in 11, close in 30, and be within that 90 days, take your money, and you have no short sale, you have no foreclosure, and you would likely walk away with money. Okay, so we know what we need to before we see prices come down. And we kind of know that foreclosures aren't going to be happening because they're still so low. So what's really going on in the market right now? Where is it headed? So let's take a look at that. So as you can see from this chart, the Cromford Market Index in all these different cities, I'm not going to lie, this right here, we've been seeing just red. Normally we had a lot of green in there that with arrows going up, but right now we've got a lot of red. However, I just want to remind everybody, the Cromford Market Index, for it to be a normal, just a balanced market, needs to be at 100. We're still some here in the 360, 313, 308. So that's far from 100. Now, it has been dropping. As you can see, we've got double-digit drops in every city that it's come down as far as percentage. So is it dropping rapidly? It is dropping rapidly. We still have a long way to go before it would ever hit a balanced market. So I just wanted to point this out so you could see all the different cities and see what was going on. I mean, Buckeye's the worst at 154. They're the closest to the 100, but it was also one of those cities that had some of the most building going on. So it's not surprising. Some of these numbers just are not surprising. So then looking at the overall market, so this is everything all together. Our overall is at 250. So as you can see, our demand is dropping. We're now in the yellow, and our supply is in the gray, and it's climbing, right? So that is what is, because both of those things are happening, that's what's making our index drop as fast as it is. Okay, now I want to show you this other slide. And I've used this a lot in some of my other videos because it's really telling. It shows you all the different years. And you can see just what happened during COVID, right? That's what that line is. How we were in 2021, where we started in 2022. And now I know this looks ominous, but I just want to point something out. I want you to see how when we started to slide off, I'm going to erase this so that we can all see this. When we started to slide off in 2020 right here, everyone felt the same thing we're feeling right now. But look at how quickly it changed and turned up. That's how fast the Cromford Market Index can change. And we cannot predict when it's going to change. So something else could happen in our economy that would make this come up. I'm going to erase again. Something could happen and we're going down and it could just flatten. That is more, this right here is more of what they think that it's just going to start flattening. It's going to be more of a correction, not a crash. But as you can also see, for prices to come down, we'd have to get all the way down here. We're all the way up here. That's a big gap. So until we get down here, our prices are still going to rise, but they're going to rise slowly. So with all that, people say, okay, great. That's great information. So do I buy? Do I sell? What do I do? And if you're planning on buying and you need to hold it for 3, 4 or more years, then I say buy. Having real estate is a great investment. It is a great wealth tool. If you don't plan on holding your house for that long, then do not buy. It is not a great investment right now. And I know interest rates are high, but I really believe that owning a home is a great investment overall. And don't forget, you can always refinance your house. Interest rates are not going to stay up forever. And when you refinance, you will likely have a couple things on your side. One, if you're still in the same job, or even if you have a new job, you're likely making more money. And when you refinance into a lower interest rate, unless you take money out of your house, your payment's going to be lower. So it's kind of a win-win for you all around. And the $1 million question is, how long will the interest rates stay high? Well, gosh, if I knew that, I wouldn't be here talking to you. Yes, I would. Yes, I would. But we already know that the Fed is planning to raise the rates again, maybe multiple times. So I don't foresee it coming down within the next couple years. However, and don't don't shoot me, because I know people get a little wary when we say this, but I don't think we're going to have interest rates this high for 7 or 10 years. So when you're talking to a mortgage professional, make sure you're talking to them about potential adjustable rate mortgages. Don't just look at a fixed rate mortgage. I mean, you can, but I think you also should look into adjustable rate mortgages, that 7-1 and that 10-1 ARM. So the 7-1 right now, I just talked to one of my lender partners yesterday, is at 4%. And that 10-1 ARM is at 4 and an 8%. Now, again, it's something to walk in eyes wide open, right? Do not make this decision lightly, but it is a way for you to keep your interest rate down right now and then refinance later as the interest rates come down. And just recently, our jumbo rates were lower than conventional rates, which was really making that luxury buyer happy, because then they didn't have to worry about trying to pull money out and put down enough money to keep them in a conventional range. They were able to get a lower interest rate. That has kind of gone away. Those jumbo rates are as high as the conventional rate. So it's just something to look at. Just know when you walk in and talk to a lender, it is not a one size fits all. Make sure you're talking to them about all the different options. Weigh all of the options. Talk to one or two lenders. Make sure that you're getting all of the information that you need to make the right decision for you. So crash or correction? I really think we're going to see a correction. I think we are going to see a flattening. I've been saying this for about a year. I do not see a crash coming. I just think that with all the equity that people have in their homes, they're not going to walk away from it. Again, remember in 2008, people did not have equity in their homes. In fact, they bought homes and never even planned on living in them. They were just using them as an ATM. So if you're waiting for the other shoe to drop, you might be carrying around a shoe for a little while. I really don't see a crash coming, just a correction. I hope this was helpful. Please feel free to reach out. My contact information is below. Make sure you check out this next video right here. I think it's going to give you some great information. As always, I thank you for watching, and I'll see you next time.